I'm Ashton Addison from Blockwest Capital for InvestmentPitch Media and the Crypto Coin Show. And today on Blockchain Interviews, we have Oliver Gale, the CEO of Panther Protocol. Oliver, welcome to the show. Great to see you again. And I'm really excited for this discussion into the DeFi world.
Thanks, Ashton. It's a real pleasure to be here again. Thank you for having me.
You're very welcome. It's been a while since we last spoke, and so much has happened in DeFi throughout 2021, and it is a really exciting time. I'm really excited to dive into what Panther is working on, which I think is really needed in the DeFi space as it continues to explode with the amount of value being locked in and the growth and interest from institutional investors. Can you kick us off with just an overview of Panther Protocol and some of the solutions you're looking to bring into the DeFi space?
Yeah, sure. So Panther can be described as a meta protocol. It is a protocol that can be deployed on multiple smart contract blockchains, public blockchains. And the problem that we're addressing at the core is one of transactional privacy, transactional sovereignty, surveillance resistance. There are a number of different ways to say it, and there are a number of different reasons for wanting the properties of privacy, not least of which is the protection of alpha and negotiating rights for individuals and institutions. So by alpha, what I mean is a competitive advantage. It might be an information edge when you're trading with a DeFi protocol as an individual or as an institution. And then, of course, underpinning the entire protocol is this idea that, and really this very idea is what underpins the Cypherpunk Manifesto, which is that a fundamental building block of democracy is privacy. And so we, as a protocol, as a community, are building solutions for public blockchains to enable any user to transact privately in a DeFi environment.
That's incredible, and it's definitely needed. I've seen a lot of software where, because these transactions are on public blockchains, you can essentially, once you know the wallet address of a whale or some institution, you can follow their every move and see what they're doing and get insider information like that. So it really doesn't have a lot of privacy right now. And I was looking into the details of these privacy solutions, and I saw that you're integrating zero-knowledge proofs with DeFi. Can you talk about that technology and why that's the specific solution needed to integrate with Panther?
Sure. Zero-knowledge proofs are a form of cryptography which have already begun to, but which we see as being a technology which continues to transform the very fabric of the entire financial infrastructure. But in addition to that, it's going to transform the relationship that we have with enterprises, with governments, and with each other around data. What a zero-knowledge proof is essentially it's proof that a certain condition has been met, that a prover can submit to a counterparty. The counterparty is the verifier, and the verifier can validate the state has been met without the prover having to disclose any of the underlying information. And so there's a zero-knowledge disclosure that's made to the verifier by the prover. Now, in simple terms, this could apply to the finance use case to something like your identification or verification process. Here is proof that I'm over 18. Here's proof that I'm not on a sanctions list. Here's proof that my transactions have not triggered any flags for a suspicious activity report. And those proofs can be submitted to the verifier without the verifier needing to actually custody the underlying data and see it. And this preserves the privacy of the actor. And it also dramatically reduces the cost of, in this case, something like compliance. Because one of the major costs around things like financial compliance is the cybersecurity costs of storage and maintenance of records. And so if you look on the global spectrum at where we are with open banking frameworks, the European Union and their PSD2 standards are ahead in many ways of US and American standards, generally North, Central, South American standards. And so the more modern regulatory framework allows one financial institution that has verified a user to pass the KYC information or proof of that verification over to another institution without the other institution having to redo all of the onboarding process. And redoing the process has a huge amount of cost, and it also undermines your data privacy because you're sharing your passport information to every single exchange and every single vendor, bank, and institution. Now, I'm using the context of financial services, but zero-knowledge proofs and this data storage and replication problem exists in healthcare. It exists in sort of IoT, any sort of big data set in economy, credit scoring and underwriting and so forth, insurance. And so the Equifaxes that we've seen take place in the past with massive hacks and data breaches, these are also part of the privacy problem. And Panther is, as a protocol, is building a decentralized solution governed by the community and its DAO to enable users to transact privately with DeFi and smart contracts and with each other using zero-knowledge proofs. And at the same time, we recognize that there are massive challenges in the compliance and data management, storage, and transportation layer. And we're using zero-knowledge proofs through a layer of the protocol that we call MetaStraight to allow an individual to go to a trust provider, get a proof of state, such as I'm over 18, I'm not on a sanctioned list country, and my ID is valid, and submit that proof to a counterparty. And so that's I'll call that the long game. That's the future of privacy and compliance and data sharing and information. One where users have sovereignty of their information, but can prove state and have counterparties verify that state.
Mm-hmm. Yeah, I think it's incredibly valuable, Oliver. As you mentioned, the Equifax hack, and even just in finance and in cryptocurrency, giving out your information to other parties or giving away your passport and not having that security behind it. If there's any hacks, which there are quite often in the space, then your information is now out there in the web, and who knows who may get access to it. So I think that's very valuable on the zero knowledge proof side. And it's not going to happen overnight, but it is something that's completely necessary. So that's really interesting. And now on the transaction side, on the privacy side, as you mentioned, doing transactions in DeFi on public blockchains, there's different blockchains, but most of them, you can just go ahead and look at transactions and see the balances, see the history of the transactions right on the blockchain right there. And that's something that obviously is crucial information if there's somebody that's trying to make a transaction private. I was looking into Panther and I saw that you're creating something called zAssets or zAssets that I'm guessing have privacy ingrained in the assets. Are those synthetic assets, or maybe you can explain more surrounding the privacy of the coins?
Yeah, of course. So I'll use Ethereum as the example because it's the first, as we call them, pair chains that Panther is being built on. So Panther has a decentralized model, but there's a hub and spoke component to it where we're building Panther extensions on pair chains like Ethereum, like Solana, like Cardano. And then we're building a private interchain DEX to allow routing of transactions seamlessly across an interconnected DeFi, interoperable connected DeFi ecosystem. And so using Ethereum and ERC20 tokens as the first example, what Panther enables you to do is deposit, say, a DAI token or an ETH token to an on-chain vault, self-custodial vault, where the assets are securely held and custodied by the protocol itself, and then a corresponding one-to-one fully backed Z asset. So in this case, it would be zDAI or zETH is minted. Panther is rolling out on layer 2 using Polygon in the first instance. So it's actually a layer 2 vault, and the Z asset is issued on Polygon's layer 2. So your zETH or zDAI is now represented on this ledger, and you have a zero knowledge proof of ownership. that essentially represents a claim to the underlying Ether DAI. And we've chosen this design as compared to other protocols which are tackling privacy, because the, sort of creating synthetic assets with it changes the fundamental properties of the corresponding, derivative token or counterparty token, what we're calling a zAsset, and exposing holders, investors, institutions, retailers, hodlers, whatever it is, to new sets of counterparty risk really confounds the value proposition of Panther. What Panther is bringing to these assets is the additional property of privacy. We're not trying to change the risk profile by, and with synthetic assets force things like collateralization or over collateralization requirements. We're really saying, today you use DAI, tomorrow you can use zDAI. Today you use ETH, tomorrow you can use zETH. And so that's what the zAsset type is. And one of the beautiful properties about these zAssets is that aside from the privacy between them, users can actually clear and settle transactions on the layer 2 in a very low cost fashion. And so there's a network effect around joining the Panther ecosystem and joining the zAsset class. And it's for that reason that we say that zAsset will be an expanding asset class as people opt in for privacy, but they stay for interoperability, low latency, low cost.
Mm-hmm. That's great. And yeah, I think that interoperability and settling on layer 2 for no to low cost sounds amazing. So that's really interesting. And with those zAssets, there's also the Panther Protocol token as well, which is the ZKP, Zero Knowledge Proof token. I would love to know how that integrates onto that network. What are the main functionalities that it's going to provide for the privacy DeFi solutions?
Yeah, well, good question. A lot of thought and energy has gone into really assessing and understanding what successful utility tokens look like in the DeFi space. And so when we set out designing Panther, there were a couple of building blocks, more than a couple that we chose. One was to focus on governance, another is to focus on composability, a third was to focus on usability, and the fourth is efficient privacy. And so when it comes to usability, we don't want to force users to hold ZKP in addition to whatever asset is in their wallet that they want to transact with. So the ZKP token is not a gas token. It is a utility token. It's a utility token because it's required to stake on, it's required for voting, and there's incentivized voting where you're economically rewarded for participating in the governance of the Panther Protocol. So that's one use case. Two, the ZKP token is used for something called privacy mining, which is the game theoretic mechanism for building the privacy set. So to use an analogy, if I have a zero knowledge proof that I'm in a Coliseum and I'm the only person in the Coliseum, it's not a very useful proof. There's no privacy there. So you need to have people in your Coliseum, so to speak, or in your Panther pool, as we call it, in order to have the benefit of privacy. And so privacy miners are rewarded in ZKP for providing assets into the pool to build the anonymity set. The ZKP token is used to bond assets for the interchain DEX. So, if you are familiar, if the viewers are familiar with things like Thorchain, there are requirements for bonding assets that secure a corresponding or proportional amount of assets held in an on-chain vault. So there's this bonding requirement where you're rewarded for bonding ZKP against the collateral held by the interchain DEX, which will be a massive driver of lockups and value for the protocol. And beyond that, there's also now this metastrate layer, which is the zero knowledge proof layer for proving and verifying arbitrary states around data. And there is a rewards program around providing those services. Now, the DApp itself, which is a decentralized autonomous organization, is going to be charging users for each of these services. They're not charging in ZKP, but they'll be charging them in the native token, and those fees will go into the treasury of the DAO. And the DAO in turn then will purchase ZKP tokens off of the open market. Almost, you can think of it, proxy in the private equity world would be a corporate share buyback, right? In any event, what you have is an outflow to incentivize usage of the protocol, and as the protocol treasury grows, tokens are acquired on the open market by way of DEXs, and those go into reserves. So as the protocol finds this equilibrium between incentivizing participation and generating fees, which are then used to purchase ZKP off of the market, you'd find that you either have an inflationary or deflationary economy. And again, in the principles of really, because privacy is about freedom and sovereignty, all of this is controlled by the token holders themselves, so they can actually calibrate the economy themselves to be inflationary, deflationary, or in an equilibrium condition, wherein there will only ever be 1 billion ZKP tokens. So from that perspective, it's a fixed cap token that can store value. But from a utility perspective, there'll be variations.
Definitely. Thank you for that explanation, Oliver. And yeah, it's really interesting that and great that the community will be able to govern the future of the protocol through the DAO. As you continue to build that out, I know that there's a lot to the protocol and that there's still more that your team is working on. Can you talk about how the community would get involved and how that transition into the DAO and moving into full decentralization will happen in the future?
Yeah, certainly. So I haven't spoken much about the team, but this team is really impressive. We collectively have over 55 protocols that we either at the core architecture level or participated in the building of. So there's a lot of credential, over 50 years of cryptography experience as well. And so this is something that we really understand how to tackle. Now, there are multiple layers to the solution. There's the technical solution, and then there's the legal and regulatory solution as well, and what we call a path to decentralization. So we spend a lot of time on that, particularly because Panther is a privacy protocol, and the key objective for us is to decentralize the protocol on day one. So we will be launching with DAO functionality in October of this year after our public sale. The MVP is a minimum viable product. So it's not going to have all of the bells and whistles attached to it around things like calibration of ZKP rewards versus inflows and so forth. But there will be a level of governance there which allows the protocol to be fully decentralized. And so our development studio, which is responsible for delivering the contract to the Panther Foundation, will launch that, and then we have a roadmap over the next 3 to 4 years to continue to build new iterations of Panther, which will then be voted on by the community as launch proposals.
Mm-hmm. Very cool. And yeah, you mentioned there the public launch and a date set around October. As you work towards that, what's the best way for the viewers to follow along? And is there any other dates that they should know about as you lead towards the end of 2021?
There are no dates which are key dates in my mind aside from mainnet launch, which again is scheduled for October, and the public sale. This is a fast-moving industry. We're paying close attention, talks with regulators, and constantly monitoring the situation as it pertains to what is now being called RegFi and things like FATF guidelines and so forth. So on that frontier, we're moving forward on a best available information basis to say that we will launch in October with the MVP, and we'll have a token sale sometime prior to that. Things do change quickly. The viewers can join our community. We are on Telegram. We have an open Telegram channel. Our website is pantherprotocol.io. It's not announced yet, but we recently bought panther.org. So we'll be migrating to panther.org. On Twitter, we're ZKP Panther or ZK Panther. And so those are the right channels to check us out. We also have a Discord as well, which is increasingly becoming active. So we would love to get to the point. Our main objective as the team building Panther is to decentralize it, foster community ownership. And this is important, particularly in the case of a protocol like Panther, more so than many other protocols, because Panther is at the core defending rights to privacy, to freedom, and to sovereignty. And those rights can only be defended as a decentralized community. They're enshrined in some of the free world's constitutions, but there are massive underminings of our freedoms through surveillance economies. And so we see our work as being hugely important to maintenance of open, fair, free, democratic societies. And we can only maintain that freedom with the support and the decentralization of the project across the board. So anyone who joins the community or sees our website and wants to be part of our team, whether it's directly or indirectly, we encourage that. There will be an incentivized testnet, which we launch as well. So that's something to look out for.
Definitely. Very well said. And thank you for those community links. Oliver, I will leave those as well in the description box below for the viewers. All the best with everything your team is working on leading up to the mainnet. I'm excited for these kind of solutions to be brought into the market because I do think they are much needed. Let's follow up in the near future, closer to the mainnet launch and when your team is preparing for the token sale. And yeah, thank you so much for coming on the show today.
Thank you very much once again for having me, and I look forward to reconnecting the next time.